Hello guys, welcome to the sharpening session. I'm just going to put the disclaimers up there on the top left hand side. She says, there you go, disclaimers are top left hand side, so please read them. Now my name is Becky, my email address is there, it's becky@traddictiv.com, and then there's also support@traddictiv.com as well, so by all means email if you have any questions or anything like that. The disclaimers that we just put on the top left hand side, please read them, not just for legal purposes, but also to understand what you can expect from these kind of videos. These are demonstrations and how we might think about the markets, not necessarily how you might choose to look at the markets yourself. So I just also want to bring you to, so we've got my email address and other email addresses there, but there's also a link I want to show you, which is tradewithufos.com/Becky. That's the link. Now here, once you've got yourself a free Trade with UFOs membership, if you don't have already, you can scroll down and you will see a place where you can ask a question in this or on this page. Now the reason this is a good place to put a question is because it means other people can see the question and other people see the answer, so we all learn from this same area. It also means that I can use the content and expand on them and do videos and things like that because it was placed in a public space, so I can then come and do a video on it and perhaps give you an entire video just to answer your question. So please, by all means, if you feel comfortable to, please ask questions there if you feel comfortable to do that. Now, speaking of, as we are live at the moment, I'm just going to keep the chat boxes up. I will be looking from side to side occasionally just to see what's going on with these chat boxes, what people are asking, where they're at, so that I will be keeping an eye. So if you have questions, if you're watching live, by all means, please do that. Now, just to come back to our welcome screen here and just show you this sort of structure. What we're going to do is we do a form of sort of lecture time, trade and trade plan reviews, perhaps questions and answers and more. Now, normally what I do is I will have some form of topic that I have in mind to be looking at, or I have in mind to be expanding on based on questions that people have. But these sessions are for you. So if you're watching live and you have a different question, by all means, let me know and I will dedicate this video to that. Now, as I can't see any questions that have come in so far, I will stick to my topic for today, but I will keep an eye out in case you have different ones. My topic for today is going to be based on some questions that we've seen on that tradewithufos.com/Becky. So let me come to that. So if I scroll down, we've had a couple of questions recently. So the first one here is when to combine UFOs. So it says here, it'd be great if you could discuss in an upcoming sharpening session when one might or might not combine consecutive or nearby UFOs into a single UFO for entry and stop loss purposes. So we'll do that. And we will also, was a second question. We will also answer this most recent question, which I have posted the answer, it's just not yet synced. It was a question about the climate, and if the dot remains big but the line starts pointing down, what does that necessarily signify and what would you do about it? So I will answer both of those questions. Now, we are streaming in different places. So we are on LinkedIn, YouTube, Facebook, Twitch, other places as well. We are also inside our closed coaching environment. Those that pay for our closed coaching environment have access to more of our time in that closed environment. So what we do is we do the same sessions, but around about halfway through, we cut off the live stream to the free places and we continue within the closed coaching community. Now, during the sessions during the week, where we're placing trades and people are following along with our trades, we usually do that after at least one trade has been placed. With sharpening, we do this over the weekend where most markets are closed, in which case we do this based on a theory. That's what this sharpening sessions are for. It's to expand on theory and methodology and concepts, which means it's not like we place a trade and then we move on and then we cut the stream. So what I would normally do is expand on one topic, cut the stream and continue within the other one. Now, so what we'll do is we'll answer that first question, that combining UFO question. We'll do that on the sort of live free stream. And then I will answer, Steve, I will answer your question about the autoclimate and how you use that in the second half of this video. Now, again, if you are burning to know the answer to that second question, by all means, let me know, email me, things like that. Be happy to help you. Okay, so considering, like I said, we're checking the chat boxes, can't see anything come up just yet. So what we'll do is let's bring up a platform. We're using TOP, which is Tradictive Options Planner. That's the platform that we have. And let's have a look at where we might see a couple of UFOs that are close to each other. We'll look at different markets. We might do Forex markets, we might do stocks markets, and we'll see. So this one is actually just about not lining up. Just about not lining up. I thought it was lining up from looking earlier, but it's actually not. Let's see if we can have a look at different time frames to find ones that are really close together that help us to prove the point as to why we might combine some UFOs and not others. So for example, let's say, for example, you've done the rest of the methodology. You've decided that you would be, by the way, we normally have a daily chart on the left if we were looking at the 55-minute on the right. Let's say, for example, you have decided that this is the UFO that you're going to place, this one here. Now, why might you combine it with this one above it for entry and stop loss purposes, and why might you not combine it? So let's talk about the differences there. Now, in this case, we're actually going to be combining about 3 UFOs together based on the rules. Now, the smaller the time frames, the more likely you are to do this, by the way. I know as well, those of you that follow the methodology, this wouldn't be a trade that would line up that we would take, but indulge me whilst I'm just trying to explain a concept. So let's assume, and what we'll do here is we'll just take a line and we'll just sort of draw where we might be, she says. There you go. So if I just move this line, my mouse is being weird today. There we go. If I just move this line. Now, let's say, for example, this line would be where I wanted to get in. Now, if this was the UFO, let's just do that. If this was the UFO, then the numbers that we have, and I'm going to make them bigger, the numbers that we have are 1.18015 to 1.18119. So because it's a sell UFO, this number here, this first number, that bottom number, the smallest of the 2 numbers, the lower of the 2 numbers, that would be our entry price. But most of the time, obviously with Forex, we are looking at like the 5th decimal place is a percentage of a pip. Normally we would round to the closest pip. Now, as this is a sell order, then what we do with sell orders always is round them down, and with buy orders we round them up. So if it's a sell order, that would become 1.801. I've rounded it down, taken it to its closest pip, rounding it down. Now, that's easy. We've got our entry price. Now, our stop loss price should be using this number here, which is 1.18119. So first things first is we round that up to 1.1812. Okay, rounded it up. Now, here's where we might then fall our stop into something else because we add extra parameters. So in the case of Forex, what we might be doing, this is what we do. This is not to say what your rule should be. You might have a rule of depending on the time frame, depending on the ATR, depending on the percentage of the value, whatever. For us, we have a very set number. We add 5 pips for wiggle room to every stop. And if the stop happens to be a buy order, we add a couple of pips for spread. So what that means is we add 5 pips to this, which makes it 7. And then we add another couple of pips to make it 9. So we rounded it up first of all, then added 5, then added 2, and that gives us 1.1819. So let me just write that out again. So in this case, our entry is now very easy, 1.1801 to now 1.1819. Okay, so 1.1819. Now, 1.1819 is here, and that falls within this next UFO. So the stop loss for the first UFO falls within the second UFO. Now, bearing in mind, our stop loss, if we're going short, short is the entry. Our stop loss, in that case then, is a buy. If you sell to get into a position, you buy to get out of it. So our stop loss is a buy. Now, if our stop loss is a buy order, we don't want to be buying in amongst the big stack of sell orders. That's what that UFO, that second UFO is showing us. It's showing us a bunch of sell orders. We don't want our buy order floating amongst there, because it might be that, let's say we got into this trade, price came up, and it reacted somewhere to this stack of orders, but we got out in the middle of them. Not helpful. So we would want our stop loss to be outside of that UFO. So we do the maths again, this time using the second number here. So in this case, we keep our entry, and our entry will always be, if I put this here, our entry will always be 1.1801 in this example, right? That entry is not going to change. Our stop loss is changing based on whether or not it falls within the next UFO. So this next UFO, the second number is 1.18. Let's write this down. So in this case, it's stop loss. Is 1.18207. So we round it up firstly. It's a buy order. We always round up buy orders to 1.1821. So we round it to its closest pip, its closest fourth decimal place. So we rounded it up. Now, we also now, because it's a buy order, we want to be adding 5 pips for wiggle room, which is 1.1826, and then 2 pips for the spread. Sorry, so that was 6, becomes 8. So 1.1828, that will become now our stop loss. Now 1.1828 is just within this UFO. So we come into the same problem with a stop loss, which is a buy order in amongst a bunch of sell orders. If we get out in the middle of sell orders, we could have been right on the direction of the trade, but got stopped out because we were too aggressive with our stop. So in this case, what we want to do, we want to make sure always that our stop falls in the white space. It's not within these red UFOs if we're going short. If it was buying, then it would be the other way around, and we'll look at a buy example as well. So in this case, we would take this number. So we'll start again. So we're taking the second number of that third UFO now, 1.18458. Round up to 46, add 5 pips. For wiggle, add 2 pips for spread, gives us 1.1853, which is round about here, in the middle of those UFOs, not in between a red UFO. So that's how we come up with our stop, and we're combining 1, 2, 3 UFOs together as one trade, with the entry coming from the bottom UFO and the stop coming from the top UFO. Why? Because the calculations that we did for these first two meant that the stop fell into another one. So we keep going until the stop no longer falls within a UFO. Now, it might be that by doing that, you end up with a zone that's really, really big, a different distance between your buy and sell that's very, very big, in which case you might decide not to take the trade. That's fine too. But based on our rules, that would be why you would be moving your stop. Now, let's see if we can maybe use a stock example. So let's maybe try Apple. A stock example to the long side, just to give a different way of looking at it. Facebook looks like these stocks. Maybe let's try smaller time frames, so 60 minute, maybe an 8 minute. Let's have a look at Amazon or Netflix. Okay. So no, I can't see that would be working. Let's look at the spiders. Let's just look at random stocks. Let's keep going until we find an example. I'm just thinking of different ones that might give us different examples. I tell you what we might do is just create them, right? Let's just make them up. So let's try Tesla as one last go. Okay, let's make them up just to prove the example. Okay, let's say you had a UFO here, and again, making up the numbers, right? Making up where they would be. And let's say that this last number was 756.70. Okay, now let's say you also had a UFO just here that was starting at, so this number, this starting number would be 756.62, for example. Okay, and then let's say this last number was 754.80. Okay, so the last number of the top UFO. So because we're going long, everything's just inverted, right? So our entry would be the top of this UFO, which let's make that up again. Let's say that was 759.50. So that would be our entry. So that's the entry. And again, let's draw it down here. Entry equals 759.50. Now our stop loss, let's say we picked this first one, which is 756.17. Now let's say, and this will depend on what your rules are. We all have different rules depending on things. With stocks, I do a 10-cent wiggle room. That's what I do. You don't have to take into account spread and things like that when it comes to stocks. So I use a 10-cent wiggle room. You might use certain numbers based again on ATR, based on value of the stock, based on the time frames that you use and things like that. For me, I'm just going to use around 10 cents every time. Easy to do. So let's say I'm going to do 10 cents. Well, in which case then my stop loss, instead of being 756.70, becomes 756.60. Now 756.60 would have come just within this UFO, the second UFO down, because that one started at 756.62. So what that means is, what I then need to do is take this second UFO and recalculate my stop loss using that second number. So that second number was 754.80. I then add my, or take away my 10 cents of wiggle room, so it becomes 754.70. And so again, what I would have done here is combined two UFOs together, entry coming from the top of the top UFO, stop loss coming from the bottom of the bottom UFO, because the original stop for the first one would have fallen within the second one. So that's a short example on Forex, a long example on stocks as to why you might combine UFOs. Basically, it's to do with the wiggle room that you give your stop losses. Are you rounding up or rounding down? Is it a buy or sell order? How many pips? How much cent or cents are you giving it in terms of its wiggle room? How many ticks are you giving it in terms of its wiggle room? And therefore, does the stop loss fall within the next UFO? If it falls within the next UFO, recalculate based on the data that you're getting from that second UFO, and keep going until your stop loss falls outside of UFOs. So hopefully that answers that question and makes sense. So looking at the time, we're only about 20 minutes in with this example, and I am conscious that I don't want to be cutting off too soon and giving you guys only sort of glimpses of things. So what I'll do, that second question that I had, I will actually answer that here, and then we'll go into the sharpening session further and deeper in the closed coaching session that we'll do for the second half of this session, where we'll do some more sort of maybe back testing drills with this. So the question was, essentially, if I just make this really, really big here to kind of show the point, with our auto climate, you'll notice that there are most times where the line is above the dot, and there are other times where the line is below the dot. And essentially the question was, if I'm in a trend or a climate going to the upside, let's take this one. So here we've got blue dots, blue dots, blue dots, blue dots, blue dots with the line above it. And then we had this one where the line went behind it. The question was, if the line goes behind or below the dot, essentially does that anticipate a climate change, and therefore should I get out of the trade? Let's assume I got into the trade on this one, and by this one, where the line is different, by this one, let's say price is here, at this point, should I get out of the trade before something different happens? Really great question. And you'll notice that oftentimes preceding a change in climate is this line to the bottom side. So let me show you nearly every example on this one. This is Tesla on a 60-minute chart. So if I want to squidge it enough so that we can see a lot of examples, but not squidge it too much that you can't see the dots anymore. So hopefully that's enough. So see this run here. We had a run of blue dots, most of which the line was above the dot. At this place, the line went below the dot on the 26th of August. In fact, I'm going to squidge this down a little bit just so we can see correlating what was happening on the chart that day. So on the 26th of August at 9:30 a.m., that was where we then had a line that went below the dot. And then the next candle, the next interval that we had, which in this case is a 60-minute chart. So at 10:30 a.m., 60 minutes from that point, we then had a change in climate. So the line going below the dot was like a precursor for the climate changing. Now, let's say, for example, in this example, you got out then on the 26th of August at 9:30, let's say where the market opened, which was there. That was at 708.23. Okay, let's say that's what you did. Then you got out because you looked at the market at that time. The line was below the dot. You thought, this is precursing a change in climate. I'm going to get out then. Now the next dot, let's say you'd have got out on that one, which was an actual change in climate, and you got out at the open there. Well, then actually you got out a little bit higher at 210.30, as opposed to, sorry, 710.30 as opposed to 708 point something. So you actually got out a couple of dollars higher by waiting for the auto climate to actually change to a new dot. Now that one example does not mean that that's the right thing to do every time. What my answer was on the page there was backtest this, figure out what's going to be better for you to do. So take this example here. We had a big, nice long run of blue dots, probability upwards. Most of them had the line above the dot. The time that the line went below the dot, that was a precursor to a change in climate. We had a new dot there that was an unconfirmed climate. So at this point, if you would have said, okay, at the start of this day, or the start of this 1 hour period, I now have a line underneath my dot, therefore I'm going to get out. Well then, let's say, for example, you got out at 736.75. Now, if you waited till the open of the next candle where it actually changed, then you got out at 730.74. So in the first example, by anticipating a climate change, you would have had actually a slightly worse result. In the second example, by anticipating a climate change, you got a slightly better result. So you kind of got an example of each. So collect enough data to be able to answer this question for you specifically on the markets and timeframes that you use. Because just because this works on or let's say we were to prove that it works on Tesla on a 60-minute chart, doesn't mean it works on the euro dollar on a daily chart or on Bitcoin on a 2-minute chart, right? Changing the market and changing the time frame are changing variables. So just because you prove it works here doesn't mean it works everywhere. So again, this is an example here. Series of blue dots, upwards climate. The lines are above the dot until this last one, which itself again was a change in climate, right? This precursed or was an anticipator to a change in climate. Great. So if that happened and we had a change of climate there, well, what if you'd have got out that day? So if you'd have got out this day at the open, or I say this day, this is an hourly time frame, right? So it's 60 minutes. If you'd have got out at the start of this interval because the line was below the dot, then perhaps you got out at 757.19. If you waited till the next interval, then perhaps you got out on this one slightly lower. Now that depends on how often you look at it. I'm not saying, by the way, you might have a dot that at the start of the interval, let's say it's a daily chart, at the start of the interval, you have a thick dot, trying to colour it in there, with the line above it. But over the course of the day, it moves because the line above it is to do with how far it is from the EMA. So it's moving throughout the day. And it might start the day like that and end the day like that. Or it might start the day, you can't even really see it, and then it ends the day like that. Let's say it starts the day like that, and at the end of the day, it's this. So you might need to actually check in couple of times throughout the same interval period to see when the line does cross. Now what we see in the past is that when the line does cross, that was what it looked like at the end of that period. So you might say at the end of, if by the end of that period, by the end of the day, week, month, whatever, 30 minutes, 20 minutes, if by the end of it, I've got a change of the line going down, then I get out then. Well, then in this case, in this example, you would have got out around about the same price that if you waited for the open of the next one. And that would be true of a lot of them, actually. You might get out at roughly the same price as you would at the open of the next interval anyway. So it is true that a lot of times when the line goes below the dot, it is a precursor to a change in climate. And sometimes, depending on the time frame and how long you're waiting for that next interval, how often you're looking at the markets, it might be able to get you out slightly at a better price than if you wait for the next dot. We can't actually see any examples where the line went below the dot and then continued a climate. So it's fair to say that the line going below the dot by the close of that candle, by the close of that interval, is a precursor for the next one. What that means to your trading is a different thing. You'd have to go back and back test to really understand whether or not it's worth you doing that, or whether or not it's just worth you waiting for the next interval before you actually close the trade, and whether or not it makes too much of a difference either way. Okay, so I think we've now answered 2 questions. I think hopefully they make sense. If you have questions for me, you can actually go to tradewithufos.com/Becky. If I just come out of this. Get yourself a free Trade with UFOs membership if you don't already, and then ask a question here so that I can answer it there, and then I can do videos on this in the future. I'm checking the chat boxes. It doesn't look like there are many questions, so hopefully that means it all makes sense. You can email me if you do have questions, becky@traddictiv.com. So what I'll do now is I'm going to cancel the stream to the free places, and I'll continue in the closed coaching environment. So any questions or anything for those of you that are watching live in other places, by all means, let me know. Otherwise, I'll see you guys soon. Have a great rest of your weekend. I'll be back on Monday, or actually I'll be back next week. Boyan will be taking Monday's market commentary. So I'll see you next week in one of the sessions. Hope you have a great end to your weekend, a great start to your trading week, and I'll see you soon. For those in the closed coaching, stay with me. I'll see you in a sec. So just need to cut the destinations where we've cut the streams to different places. So give me 30 seconds or so and I'll continue in the closed coaching.